then I'd like to just introduce this presentation. Obviously, with the beginning of the new year, everyone is concerned about tax season, both personal and business taxes. And one of the things that we have found in our discussions with customers over the last few years is that the business sales and use tax environment in the United States has become more and more complex. And because of that, we thought it would be a very timely way for us to start this webinar series to invite the Avalara people to come in, because Avalara is really one of the leading companies in business sales tax compliance and solutions. Now, without taking up too much time, I'd just like to say, as I said, we've invited Avalara to be our presenter today. The title of our presentation is Sales Tax Compliance in Manufacturing and Distribution. And because of the unique set of sales tax implications and different taxing authorities, we thought that it was important to have someone that was really an authority in this area. So Scott Newell, who is the National Sales Manager at Avalara, has joined us and is going to be our presenter for today. As I said at the beginning, all of the phones are muted. If you have questions during the presentation, feel free to submit them in either the chat or Q&A boxes at the side of your screen, and then we'll have a live Q&A at the end of the presentation. And I obviously have already taken up more time than what I wanted to. So at this point, I'd like to go ahead and turn things over to Scott so that he can begin our presentation. Scott, it's all yours.
Thank you very much, Jeff, and welcome to the webinar, everybody. My name, again, is Scott Newell. I've been here with Avalara for a little over 2 years now, working within the exact space and mid-market ERP systems that we tie into. And I've been in the tax world now for, over 10 years. That's what my education was in, and all my friends thought I was crazy, but it's something that I find interesting, and found a pretty neat company here with Avalara that combines technology with taxation. So no further ado, let's get started. The agenda for today is I'm going to go over the landscape of sales tax compliance. It's a topic that what I've found is typically not something that people like to study. It's not something that people really understand all that well, from business owners, CFOs, controllers, accounting managers, and all the way to CPAs. In fact, really just don't like working with sales tax compliance. It's not high on their totem pole. So I'll go over the landscape and what sales tax compliance means to businesses today in the manufacturing distribution industries. And then I'm going to go over Avalara for Macola. I'm not going to do a live demonstration as we don't have really enough time today, but what I'm going to do is go over a high-level view, about 30,000 feet, of how our solution works for Macola, as well as all the other systems that we tie into as well. And then at the end, like Jeff said, we're going to have a questions and answers session. Okay, the sales tax landscape begins with nexus. Nexus is a term that describes the requirement imposed on businesses by states to collect tax dollars on behalf of the state for the privilege of doing business there. It is run by a physical presence, and it was actually coined by a Supreme Court case back in 1992 named Quill versus North Dakota. During the Supreme Court case, Quill Corp, which was an office supply company, was being forced by North Dakota to collect tax, and they believed it was a competitive disadvantage to be required to collect tax in a state that they had no connection to. Quill Corp had no physical presence, they had no office building, nothing like that, and they believed no connection to North Dakota, and therefore no requirement to collect. They challenged North Dakota and won in Supreme Court. And the phrase that was coined during that case was substantial physical presence. And as you can probably see here and where this road is going, substantial is a very gray term. It can be interpreted multiple different ways. It historically has been an office or a warehouse, something physical building. employees representing your company, contracted sales force or installation crew, 1099 independent contractors who are contracted by a business and to go into that state, regular visits into a state, say for trade shows, soliciting business, things of that nature where you're driving on the roads, you're looking at the street signs, you're controlled by the street lights, etc. So walking on the sidewalks, you're using the infrastructure of the state. Historically, that's what has driven the requirement to collect sales tax. This is changing, and the states are getting hungry for revenue. States like Washington State, where I'm located right now, I'm in Seattle, half of the state's revenue comes from sales tax collection. So what these states are now doing is broadening this definition, or their interpretation of this definition of nexus, and they're getting more aggressive with the term substantial. And physical presence is even becoming somewhat of a loose term. There's an economic nexus that's on the horizon. It already passed Congress. It's a bill called the Marketplace Fairness Act, and it already passed Congress. It's sitting in the House. How it's specifically going to look might change by the time the bill passes into law, but what it'll effectively do is broaden the terms that states can use to require companies to collect sales tax. And what's written is they'll have a tie to a state based off of amount of revenue sold there. The details, again, I don't want to really go into because they might change. In fact, it probably will. It's not if this bill passes, it's when. And it'll affect not just online retailers, but also remote sellers is what they're calling it. Phone orders, catalog, mail orders, lots of different types of ways that will be affected sales-wise, and there will be a threshold of revenue into a state that will run this, actually. What that is, I'm not sure. Right now, it's sitting at $1 million. So here are some examples of what states will interpret as nexus-generating activities. Traveling salespeople. If a salesperson travels into a state for the purposes of soliciting business, states generally treat that as a nexus-generating activity. If they're there for one day, an aggressive state like Washington, California, Colorado, Texas, they might interpret that as having a permanent nexus generating activity, even if they never go back, if they step foot in the state one time. Some of the other states, it might be a flat rate, Tennessee, Kentucky, they might not interpret that. It depends on the state. And that's a famous phrase here at Avalara, is it completely depends on the state. Each one is different. Contracted labor. Something I run into frequently is a company that's utilizing a third-party sales force, where they're not employees, they're not 1099 independent contractors, but they're an entire company that is selling a product. That third-party sales force, because they're representing a company, generates nexus if they're in that state. Something to pay attention to. Company representatives, it's very similar to what we talked about already. Owning or leasing any real or personal property that goes into a state. Something I also run into frequently is rental or leasing of equipment. Just yesterday, I talked to a company that is leasing large machinery for they compress gas. They don't own the gas, but they're performing a service for a gas company, and they compress the gas and then it's shipped out. But they maintain ownership of that compression equipment. When that equipment goes into a state, that equipment is representing that company and therefore establishing nexus. So promotion of products or services through a third-party website that has nexus in a state. That's called click-through nexus, something to pay attention to there as well. Trade shows and exhibits, I already talked about that. This is a short list of things that states now are looking at that generate nexus and the requirement to collect sales tax. Okay, so nexus runs everything. If you don't have a physical tie or some sort of remote tie in the Salesforce or something like that to a state, then there's no requirement to collect sales tax and your life is made easy. But if there is a tie to the state says you need to collect tax, then it gets a little bit more complicated, and there's two routes to go. One is, well, the first stop is your customer taxable or not? And in the manufacturing and distribution sector, that can be 50-50, 80-20. It completely depends on how the transaction is being made and also who it's being made to. So let's first talk about an exempt customer. Exempt customers require an exemption certificate to be collected to prove that they are actually exempt. If you do not get this certificate, you cannot prove to the state that they're in fact exempt, and therefore you will be held liable for all the sales taxes due on the transaction, plus penalties, fees, and interest over the time period. And that margin of error, which can be upwards of 9.5%, is extrapolated across the gross sales for which that auditor is auditing. It can be massive. There's a huge amount of risk associated with exemption certificates that really goes unnoticed frequently. If that is a simple piece of paper, it's very, very easy to collect up front. Well, in some cases, sometimes it can be a little bit difficult to get that from your customer, but it's a piece of paper. It's very cheap to get it. It doesn't take a lot of labor. There's not a lot of research to do, nothing like that. It's very cheap to acquire that piece of paper up front, but it can be extremely costly if it's not collected and you go through an audit. So there are two types of exemption certificates. The first one is entity-based. I use the examples of churches, hospitals, maybe tribal centers, things like federal government, state governments. It's based off of who your customer actually is. And these typically do not have an expiration date. They can, it depends on the state, but typically that company would have to completely change who they are and what they do to no longer be covered by that exemption certificate. These do carry a large amount of risk because what happens typically is there's a trust factor between vendor and client. And I've run into a lot of companies that say, well, I trust them. I understand that they tell me that they're a state government or hospital. I know that they're a hospital. I know they're tax exempt, so I don't need to collect a certificate. Well, that's completely false. And an auditor will identify that, yes, that's a hospital, but there are for-profit clinics. And so the auditor still needs to see that certificate to prove that that customer was, in fact, a hospital, a publicly funded hospital. So entity-based can be very deceiving. You still need to collect a certificate. Use-based. Use-based is how that purchase is actually being used by the customer. The one example I really like to focus on this is resale certificates. Resale certificates can have expiration dates from a single purchase all the way up to perpetuity. So resale certificates are extremely risky in that the time period in which they expire typically is not noticed. When a resale certificate is collected, you need to be able to track when that expires. Because if a sale is made after that certificate expires, it's no longer applied. An auditor will not recognize the certificate on a sale after the date of expiration. So that's really the risk factor with use-based exemption certificates. Okay, so we talked about a non-taxable customer and how an exemption certificate needs to be collected to cover them, and they need to be managed and along with the expiration date on use-based certificates. Now let's talk about a taxable customer. Taxable customer is more complicated. It costs a little bit more up front in labor, time, effort, research, etc., because there's a couple factors that go into it. The first one is product and service taxability. And what do I mean by this? Well, different services and different products are treated differently in different jurisdictions. For instance, Washington State taxes almost all services with a lot of exemptions. However, lawn care services, architecture, things like that, they're taxed in Washington, but not necessarily in California or Texas or Florida or anywhere else. So this is a great example that I have here, candy bars. You walk into a convenience store or a grocery store and you walk to the candy aisle, and one would assume that they're all taxed the same. But that's completely false. It's dependent on the ingredients of the candy. I would look at both of these as a candy bar, not a food of any kind. But the standard Milky Way bar is actually a non-taxable good because it has wheat in it. Wheat is considered a food. However, the midnight dark bar does not have any wheat in it, and so it's considered a snack and a candy bar, and therefore is taxable. And this is in specific states, not applicable across the nation universally. So the burden of doing this research is on the business to get it right. The state assumes that the business knows this research because they post it on their website in a very difficult area to find and in a long form, and the businesses are required to know this. If they do it wrong, the auditor will find it out, and the purpose of an auditor is to make sure that the businesses are compliant and are doing this correctly. So these are just some examples of difficult industries: software, hardware for computer systems, etc., clothing and apparel, school-related items, medical devices, digital goods, services such as installation. Installation repair labor is actually, this slide is out of date. I put this slide in about 9 months ago to this webinar. It is now taxable in 22 states. So 2 states have come on board in the last 9 months. All right, so the first complexity of a taxable customer is making sure that the products and services are actually taxable or not. Second complexity is the rate. You have to charge the right rate. And in some states, you have to be able to break out the different jurisdictional details. So city, state, county, special taxing jurisdictions such as transit authorities, etc. Zip codes are completely the wrong tool for the job. It's like trying to use a hammer to unscrew a bolt or something. It doesn't work. Zip codes are made to sort mail. That's it. That's all they're made for. It's to sort mail into different counties and cities and specific areas that can go through an additional sorting procedure to get to the specific address. They're not designed to be used to calculate tax with, not at all. There's 150 million mailing addresses in the United States with 11,000 different jurisdictional rules, 35,000 sales, use, and rental tax rates, over 30 million product and service exemptions across the United States, with 750,000 buyer-seller, this is customer taxability exemptions as well. So trying to do this with a zip code might work in certain states, where it's a flat rate state, or like Wisconsin, where it's county-based, which is accuracy per zip code, but only those very, very few states in the nation. All right, so let's put all the pieces together. Starting with nexus, if you have nexus or physical presence with a state, then you have a requirement to collect sales tax. If you don't have to worry about it. If you do have to charge sales tax, you have to look at the taxability of your customer. If they're exempt, then they need to prove why, and you need to collect a piece of paper to prove this to an auditor. That's risky. If they're taxable, you need to be able to know if the products and services you're providing to that customer are taxable in that state. In addition to that, you need to be able to calculate the correct aggregate rate, but be able to break it out in a state, county, state, city, and special taxing jurisdiction detail level to be able to put it on the return. That's complex. A lot of businesses in the manufacturing distribution sector have a split part of this. They have some taxable customers, or some events could be taxable, and on the flip side, that same customer could be non-taxable for a different purchase. So how do we manage this? Oh, my apologies, I skipped this slide. The final piece is a sales tax return. You have to prove what you did to the state, to tell them, and you have to give them the money, and you have to do it correctly. If you do it incorrectly, it's a red flag to the state, and they'll come visit you. And so you have to be able to do this. And then you have to be able to prove to an auditor that what you did was right, in case you get audited. They just want to make sure you did it right. All right, so a good way to do this is keep clear and complete records of all transactions, jurisdictional breakout details, where your research came from, who did it, etc. So details of each transaction. Realize we're kind of running short on time here, so kind of speeding up at the end. My apologies. So how to reduce risk in audit?
Scott, if you need to take a couple of extra minutes to make sure we don't leave important information out, please do so, and we can accommodate a little bit of extra time reduced from the Q&A. So I feel like it's important that we cover this information for our attendees, and please take your time to go through and don't leave things out that you want to make sure we cover.
That sounds great, Jeff. Thank you. Okay, so a nexus study. What is a nexus study? It's simply looking at your business activities, comparing them across the different nexus generating activities, short list I went through earlier, and seeing if you actually do have the requirement to collect sales tax. I have a short story that I'd like to tell regarding the importance of knowing where you need to collect sales tax. There was a company down in Portland, Oregon, selling mattresses. This is a key term to this story. Oregon is a non-sales tax collecting state. They have personal income taxes. They collect their revenues from other sources. They do not have a sales tax. And so Oregon businesses are not very versed in compliance in other states because they don't have to do it at their home state. Washington State, just north, literally over the Columbia River from Portland, is a very aggressive state, like I said before. Well, this mattress company was selling mattresses and delivering them because some people don't have a large enough car to carry a mattress. Well, they're making these deliveries into Washington State. They're delivering all the way up to Tacoma, Olympia, Seattle, etc. But they believed that the transaction occurred at the store where the mattress was actually purchased. So they're not charging sales tax on any of the deliveries or sales going into Washington State. Because of this misconception of sales tax compliance, the truth behind it is the transaction is completed where change of possession occurs. Because they're delivering and charging a delivery fee on the invoice and original purchase, the actual change of possession happened where the mattress was delivered, not at the store. What happened was an auditor was sitting by the side of the freeway and watched their delivery truck drive by. He was eating lunch, looked up the company, realized they were not registered in Washington State. He audited them, found $800,000 in past liabilities due to Washington State alone, and with penalties, fees, and interest ballooned up to $1.2 million. Washington State believes that there was an intent to evade taxes in Washington State by the owner of the company. Because of that fraud, and because of that, the protections of the LLC were not sufficient to protect the owner from personal liability. The owner lost her house, the business went under, and 120 employees lost their jobs because of one state's sales tax audit, because they did not know that they needed to charge sales tax on the delivery of the mattresses and the sale because point of possession changed in Washington. So it can be a huge risk factor for businesses not knowing where to charge sales tax. Okay, staying up to date with rates, rules, and boundary changes. Things change all the time with sales tax rates. There's sales tax holidays around back to school. Lots of stuff happens each month, and it can happen mid-month as well. So staying up to date is important. Self-reporting consumers' use tax. This is low-hanging fruit for auditors. Usually the first thing they audit is this, consumers' use. This and also non-taxable sales, making sure that exemption certificates are on file. Usually the first things they see. If there's errors here, there's errors other places as well. So making sure that correct consumers' use tax is reported is imperative. The best way to do this is to automate it with technology somehow. So there's not a person that's dedicated to do this in the back office that honestly would hate their job. So they're either going to move up or move out. So understand your filing requirements. Filing incorrectly is a red flag to the state that says, hey, I can't fill out a form right, so come see me, I'm probably doing other stuff wrong too. That's literally how they interpret filing incorrect returns. They will come to you. Calculations that are rooftop accurate. You want to make sure you have these for states like Colorado, Alabama, Louisiana, Arizona, California. Rates can change as much as 5% house to house. If you use a zip code, you're doing it wrong. Product taxability coverage, making sure you know if your products are taxable or not. This is important research, and it changes all the time, so you have to continue to do it. And a process for managing exemption certificates. The key thing here is expiration dates, making sure you know when your certificates are expiring. Okay, so these are the things you should have in place to properly manage sales tax compliance. All right, so I've gone over the landscape of sales tax, and hopefully everybody learned a little bit about the landscape, and I've been studying it for years. It's what I do on a Friday night. People think I'm crazy, but I find it fascinating. And that's why I joined Avalara. And I'm going to go a little bit over Avalara, not too deep, but I'm going to tell a short company story of how we got started and what we're doing today. Our technical founder, who's in the photo up there on the right, that's our CEO on the left. Our technical founder, Rory, was working for a major e-commerce company back in the late 1990s, and they had nationwide sales tax compliance requirements. He was tasked with creating an online tax engine to manage this from all their different locations around the country. And what he did was he built that engine, and he only needed to update it in one place now. So he would do all the new research for the rates, rules, boundaries, et cetera, and update it online. And he thought, hey, this could be valuable if other people could use it, but how can that happen? And he thought, hey, let's build what we call connectors to major ERP systems, accounting platforms, and online shopping carts, and let other businesses tie into this to take advantage of the research I'd done. That's what he was thinking. And needless to say, he hit the nail right on the head, and we're now the industry leader in automating sales tax compliance by customer base. We've been in business for 10 years now. We just celebrated our 10-year anniversary this past, what was it, November. And we have thousands of customers with hundreds of connectors. Actually, we tie into over 400 different ERP platforms and accounting packages now. We manage millions of exemption certificates, calculate on billions of transactions each year, and last year, we just surpassed filing over 500,000 tax returns for our customer base. This is just a handful of household names you might recognize. The point of this slide is, well, of course, a little bit to brag, of course, but realistically, what it shows is that our tax engine is taking care of these companies' sales tax compliance, and it's the exact same tax engine that our entire customer base ties into. Of course, it's in redundant servers across the nation and globe. We just opened an office in London, just opened an office in India. So the tax engine is in multiple locations. However, it's the same research as these companies see. So this is just an example of the systems we tie into. There you see Exact, Macola. We tie into Macola, Macola Progression, Macola ES, Macola 10. We also tie into Globe. So lots of different solutions from Exact that we tie into, and I'm sure everybody has heard of Macola Online, or Exact Online. We're working very closely with Exact to be able to tie into that as well. So lots of different systems, as well as SAP, QuickBooks. QuickBooks is actually one of our #1 connectors there because the customer base is so big, and it's kind of an interesting market in that a lot of businesses are a single person. You know, you can go and get QuickBooks from Best Buy, and they don't know sales tax compliance. So that's a large solution for us as well. So, all right. This is a high-level view of how it works. I'm not going to dive into Macola specifically. I'm not going to show you our tax engine either. Hopefully this is sufficient to provide an understanding of how technology can address the different aspects of sales tax compliance. What we do is we tie into Macola with a simple piece of software into the invoicing process. It bypasses the need to manage rates and rules within Macola. And we change the tax code for customer records to AvaTax. That's the trigger for our script. And all we do is Macola sends across the secure connection to our tax engine, pertinent information to calculate tax. We need to know where things are going from and going to, line item detail amounts, dollar amounts, etc. And we look at that information and we make a tax decision based off of the entire tax landscape that we just went over. We look at exemption certificates, we look at the expiration dates, the customer name and if that's associated with them. We look at the boundaries and jurisdictional details, and we bring back a single dollar amount for sales tax due on that invoice. It happens within a fraction of a second. So now whoever is doing that invoice doesn't need to try to select the right rate or apply taxability per line item. They don't need to do that. We don't know who is doing an invoice, so we keep it very simple. I've run across interns doing invoicing. I've run across CFOs doing the invoicing. I've run across lots of different aspects. And so it eliminates the risk of that person not knowing sales tax and applying these rules correctly. So, tying with a simple piece of software, that software communicates with our tax engine in the cloud represented by the A there, and that tax engine has all this information in it, and we return back that amount. It's that simple. There's an arrow that's missing here, and I don't know if you guys have seen it yet. There's an arrow between the customer and us, and then us and the state, but there's no arrow between the business and the state. We stand directly in between our customer base and the states. We back up our rates and rules, so if the state challenges our rates, as long as the system is set up correctly, we go to bat, along with the rules that we apply, boundary, jurisdictional details, etc. So we stand between our customer base and the states. All right, so that's effectively it. I only went 5 minutes over, so that's fantastic. So hopefully we can open it up to questions and answers. In addition to that, because of the partnership between Algorithm and Avalara, anybody on this webinar today is eligible for a pretty significant incentive that was approved by our Director of Sales. I went and got this for all attending today preemptively. So if this is interesting to anybody, I'd like to further the discussion offline and one-on-one, learn about your specific sales tax scenario, because each business is very different, and learn a bit more about your business and see if this might be a good fit, and technology-wise, to take care of your compliance scenario. If you find that it's a good fit, move forward. 40% off activations is available, and an additional 2 months of free service up front to accommodate timeframes and setup and configuration as well. So this is good through the end of the quarter. So if anybody has any questions, they must contact me directly, as if you just call into the general line, none of the marketing department that will answer your call knows about this, okay? Specifically for this webinar only. And there's my contact information there at the bottom. And let's go ahead and open this up to questions and hopefully some answers.
Okay, hey, Scott, terrific presentation, and I really appreciate all the information. Thank you very much. Also, just so everybody understands, we were not aware of this special offer that Scott just mentioned for the people attending this webinar. I want to make it very clear, we will not extend this offer out to someone who sees this recording. We actually do have a list of people that are attending this webinar, and so by attending this webinar, you qualify for this offer, whereas someone who sees the recording does not qualify. So, Scott, thank you very much for that offer. I have unmuted the phones, and so I want to give everybody an opportunity to kind of collect their thoughts. If you have particular questions, please speak up. If nobody has a question, I've thought of one while we were going through the presentation, and I'd like to just open up the question and answer period with that, if you don't mind. Scott, it sounds to me like there are two different sort of components here that your software really helps customers with. One is obviously avoiding audits, or if you are audited, then at least being able to show that you're in compliance. Is that accurate, that that's one of the clear benefits of using the Avalara service?
Yes, and that's really the number one piece, is a lot of ERP systems have a lot of things to do. From inventory, financials, there's a lot of pieces that go into an ERP such as Macola. Sales tax is not generally a piece that is focused on. So reporting for when an auditor does walk through the door. Now, I wish we could put a chain on the front door of our customer base and disallow auditors from walking in, but the reality is we just can't do that. So the real value is, well, the real major benefit and risk mitigation comes in the form of ability to provide reports to auditors when they need it. It really shortens the audit period. Rather than having that auditor set up shop and require a full office for a time period of 2 weeks to 6 months, we've had our customer base's audit last as little as 20 minutes, where the auditor walks in and the customer says, yes, we use Avalara. They take care of all of our sales tax compliance. The auditor says, that's fantastic. Let me just make sure it's set up correctly, because a lot of auditors know our system very well now. In fact, this is a fun fact. 5 states now use our solution to store their data. They were not confident in their own data integrity for their rates and rules and boundaries, and so they came to us to allow us to take care of their information for them. So those states love us. So if you get an auditor in one of those states, they'll literally turn around and walk out because they know it's right. And that's about it. They'll just check how it's set up, make sure that nobody's gone in and fiddled with it and turned off the nexus jurisdictions when they do in fact have nexus, et cetera, things like that. But it really assists with a sales tax specific reporting ability to A, get returns done right, since we do it for you, and B, for an auditor.
And then the second thing that I identified, and it came from a conversation that I had with one of my customers recently, and it was because of the email that we'd sent out about this webinar. He got back to me and he said, literally, we have 0 sales tax because of the nature of our business. However, use tax, we do all manually, and the number of hours that we spend on use tax calculations and record keeping, it's almost too many hours for us to quantify. And so am I correct that the other huge benefit for users of your service is that you can actually become more efficient in terms of your employees' time? Rather than having to manually calculate and track everything, it's automated. Is that correct?
That is correct, Jeff, yeah. And I'll illustrate this with another story. I love stories. I have lots of examples of things from doing this for some time now. I didn't actually bring on this customer, but an associate of mine did. It's a coffee company and a competitor to Starbucks. And one of the benefits that they give to their employees is free coffee. As long as they're on the clock, they get as much coffee as they could possibly want, and they never have to pay for it. So the kicker is in use tax here, and I want you to think a little bit sideways on this. They charge, so when they make their purchases of cups, lids, stirrers, creamer, coffee itself, et cetera, they're not paying tax on that purchase because it's for resale. So this is an example of this coffee company would be providing a resale certificate to their vendors so they can charge their customers tax. That's what the state wants them to do, because the higher dollar value on the materials that go into it is on the final sale to the end customer. So that's the money that the state wants. So they're great with that. That's not the issue here. So they're charging sales tax on site to their customers, et cetera. Now those same cups, that same coffee, stirrers, creamer, et cetera, is going to the employees for free. There's no funds exchanged. And so an auditor actually was in auditing this company, and they were like, great, you're doing a fantastic job with your sales tax rate. That's been 100% correct this entire time. Your returns are spot on. Everything looks great. And the auditor sat down and was like, well, I'd love to have a coffee. And so the owner of the business gave him a free coffee. Here you go. Thank you very much for stopping in. And the auditor sat down and just nonchalantly stayed there for about 2-3 hours and watched customers come back and forth and watched how much coffee the employees drank during that time period, including the cup that the owner had given to him. And went back and said, well, based on my math, you owe $80,000 in use tax because you're not remitting on the cups and the stirrers and the coffee and the et cetera. And these are the calculations that I did in watching the quantities of what's being consumed here. So they got hit with an $80,000 use tax audit because the employees were getting free coffee. They were not remitting use tax on the cups and the coffee that they were consuming. So use tax can creep up in weird ways, and if it's not remitted, can be a huge headache. So needless to say, they are a customer of ours now. We take care of their use tax compliance, and we do that for Macola users as well. Basically, any business that has a use tax requirement, we can calculate the tax that's due. We can also calculate if a state rate has been paid, but not a city rate. It comes into play in states like Colorado, where a city manages its own sales tax compliance separate from the state. A purchase can be made by a business in Colorado, and they'll pay the state sales tax, but not the city that needs to be paid as well on a use tax basis because the vendor did not have nexus there. Very complicated scenarios can pop up with use tax. In the end, we can take care of it, we can help automate it, make sure it gets onto that same sales tax return that we'll be doing as well.
Terrific. Now, we do have a question from one of our attendees in the Q&A section, Scott. Just to save time, I'll go ahead and read it for you, and then if you wouldn't mind, it's related to the mattress store example that you gave us. Would sales tax still have needed to be collected had they used a third-party delivery company like UPS or FedEx?
Great question. No, in fact, then the change of possession would have occurred at the store. Third parties, such as FedEx or UPS, are called common carriers. And when they deliver, or DHL, or a freight company, for example, I recently bought a table. There is a store right by my place. The table did not come from the store, but I did end up having to pay sales tax on that because they did have nexus in Washington. But it was delivered via a freight company. If that mattress company did not use their own company truck, then they would not have the requirement to collect because UPS and FedEx and a freight company does not directly represent that mattress company.
So, again, taxes are more complicated than they appear on the face, and it's one of the reasons why we personally oftentimes go to a tax expert to help us navigate those difficult waters. Is that a fair statement?
Completely. And the hard part is CPAs really, there might be a handful of CPAs that enjoy this, and I think we've hired them. It's not high on the totem pole for CPAs to want to do this. It's usually not a value add to their services that they're providing. It's something that's on the side. We've partnered with, I don't even know how many now, but the number just keeps rising. The number of CPA firms, accounting firms and CPAs that we've partnered with, that they actually outsource the sales tax compliance to us. We have an internal team of tax attorneys, ex-auditors that handle professional services and any kind of interesting scenario that maybe require some manual effort. We work with lots of CPAs that rely on us to take care of sales tax. So it's much more complicated than it seems on the surface. And there's lots of aspects, and whenever I hear that a business just doesn't run into sales tax, I kind of laugh a little bit and say, well, I'm a little worried for you then, because I guarantee you run into it in some way, shape, or form. So.
I understand. Now, before we go any further, I did have the thought, and I wanted to mention this. You mentioned at the end of your presentation when you were showing just a high-level view of how Avalara fits into this scenario of providing a solution for Macola users. Obviously, we didn't do an actual demonstration of the Avalara or AvaTax product, but obviously anyone attending feel free to contact your algorithm account manager. If you don't know who your algorithm account manager is, please let us know, and we'll make sure that the correct person gets in touch with you. But we can arrange for a specific demonstration and or discovery call for your needs with Scott. And so that's something that I know Scott has offered to do for us previously, and we're more than happy to help facilitate that, because obviously one of the things that we see our job or our role as for our customers is trying to provide the best information that we possibly can so that their businesses can be more successful. It doesn't have to involve buying software. It doesn't have to involve anything specific other than trying to find the best solution for what your business needs are. And so I would encourage anyone attending or viewing the recording of this webinar to please reach out to your algorithm account manager. We'd be happy to facilitate answering any questions that we can, obviously, but as Scott said, most people are not experts in sales and use tax, and we're not either. And so that's one of the reasons why we work with a partner like Scott and Avalara, because they are experts in this area. So please make sure to let your account manager know if you'd like to see a demonstration, and we can arrange that for you.
Yes, definitely. I enjoy conversations with new businesses and learning about different business processes and how they're set up and how they interact with the sales tax compliance landscape. I'm usually the first to say, well, hey, this might not be a good fit, or this might be a good fit, let's consider it. So I always enjoy those conversations. So if there's any questions, or if you want to go over your specific sales tax scenario, please contact your representative at Algorithm, and they'll loop me in appropriately, and we'll just focus on your sales tax scenario when I have that discussion with you.
Terrific. Now, does anyone that's attending the webinar, does anybody have any additional questions that we can try to address? Please, you can either speak up or feel free to type it into the Q&A or the chat boxes in the WebEx presentation event center. We'd be happy to try to address those for you at this time. While we're waiting for any last-minute questions, I want to let everyone know that as we end this event, you're going to be redirected to a sort of a survey that we would like to ask you to respond to help us prepare and do a better job in terms of these webinars, whether it's suggesting additional topics, or if there's something mechanical, whether it's not being able to hear properly or see properly during the presentation. Please take the couple of seconds to fill that out. It will help us do a better job, and we would appreciate that. And then also, the other thing that I, again, want to mention is that we do have the exact customer conference coming up in May, Evolve. It's in Boca Raton, Florida this year, the second week of May. If I'm not mistaken, Scott, Avalara is going to be there as well. Is that correct?
I believe I will be there personally. Yeah, I think I will, along with another associate of mine, and who is at this point in time, I don't know who it will be, but I know I will be there. Yep.
Terrific. And Algorithm obviously is very proud to be the platinum sponsor for Evolve this year. We would love to see all of our customers come and join us there at the customer conference. I know from speaking with our customers who have gone to Evolve last year, they found it very informative. It also gave you the opportunity to network with other people using the software that you do. They may not be in the same business that you are. They may not use the software the same way, but it does give you a sense of the community of Macaulay users that are out there and the different ways that you can use the software than what you are currently using it. And it's an invaluable sort of fact-finding and information-gathering experience. It's for 3 days, like I said, the second week in May, and we'd like to invite everybody to come down and attend. Obviously, if you want more information about it, you can find it on the Algorithm website, or, again, you can contact your account manager here at Algorithm for more details. And I don't see any other questions coming up in the Q&A or chat boxes. Last chance, I'm going to give everyone an opportunity. If you have other questions, please feel free to ask. Otherwise, we're going to go ahead and end the recording at this point. Scott, I want to thank you very much for a very informative presentation. It wasn't, as you said, a real demonstration of your solution. It was helping understand the complexity of the entire taxing environment and how it is evolving and becoming even more complex. As you said, just in the last 6 months, there were 2 more states that were added to that list that are charging taxes in a unique or different way. So thank you very much, Scott. I appreciate your time and information.
Thank you, Jeff. Yeah.
Oh, no, and again, what we're trying to do is just help our customers become more informed and help them operate their businesses more efficiently and avoid that pain of the tax man coming to your door. So again, Scott, thank you very much. Everybody that's been attending, I'd like to thank you for taking the time out of your day. I know that it's the middle of the day, which oftentimes is very hectic. So unless somebody has some last-minute questions, we're going to go ahead and end the presentation now. But please don't hesitate to follow up with us if maybe tomorrow you think of an additional question you'd like to ask. Please don't hesitate to contact us. We're here to try to help. Again, unless there's a last-minute question, I'm going to go ahead and end our recording, and we'll end our presentation. We'll get on with the rest of our day. At this point, thanks again, Scott, and thanks, everybody, for attending.